And for more on China's economy, let's bring in Yan Liang. She is Professor of Economics at Willamette University. Welcome back. Good to see you again. First question must be, obviously, exports are way up, but imports are down. What does that tell us about China's economy in terms of that dual track we hear so much about? Are they actually doing well despite all the chaos, both inside and out?
Yeah, great to talk to you, Nathan.
Yeah.
So I think the export number shows that, as we talked about before, that China has a very complete, supply chain within its country, and its production has been very competitive in terms of, low cost, fast turnover. So that definitely helped with its export growth, given that the rest of the world are still relying very much on China's manufactured products. So that helped with the export front. But then import front, as you said, in March, we've seen a slight decline. It's a negative 0.1% of growth rate of the imports. And that has to do with, of course, the softer demand domestically due to the COVID and the lockdowns.
Let's widen it out and look at particular countries. Obviously, China's trade, especially when it comes to exports, doing well. But let's look at the European Union, the US, Russia, and of course the effects of the ongoing war in Ukraine. How's that shifted?
Yeah, so ASEAN countries and European countries very much again rely on China's exports, and I think China's exports are definitely helping to stabilize the supply chain and also help to in some ways lower that inflation in all these various countries. So I think on that front, China is contributing very well. But with the lockdown, China's imports of oil, crude oil, has tumbled by 14% last month, and also copper. So I think we will see some supply chain disruptions because of the lockdown. But China right now is still operating many of the factories, even though they have reduced production or suspended. But the closed loop management and also drawing on their inventory has helped to continue with that export production.
Well, I mean, you basically answered the COVID question I was going to ask you, but how much of an impact do you think it could have on Chinese exports, or is this going to be essentially sorted out over the longer term because the demand is still there, especially from US and elsewhere?
Yeah, I think the demand side will remain to be strong, as you pointed out, but I think the supply side is something of concern. As we know, Shanghai is still in pretty strict lockdown, and alone handles about 10% of China's trade, and its port handle about 16.7% of China's container shipment, and that's about 4 times the size of the ports of LA. So the ports are still functioning, but again there are some slowdowns, there's some jam locks. So I think going forward we might see some hiccups in that supply chain, but at least I think for now we're still seeing pretty I would say functional that trade transactions and exports. But again, all of these I think really depends on how long this restriction of lockdowns are going to last, and whether or not there will be more sort of creative way of resuming production.
Yeah. In terms of the rest of China, inflation is up, not as bad as we're seeing here in the US, and we had a story of the UK. But how are consumers dealing with higher prices, and what at the macro level is Li Keqiang and everyone going to do in terms of keeping the economy humming along? And is that growth target really realistic anymore?
Yeah, I think there's a lot to unpack. So yes, inflation is slightly up right now. It's 1.5% compared to last year's 0.9%, but that's much lower than UK, over 6%, and the US 8.5%. So I think on the inflation front, I think China is handling very well. But I do worried about consumer demand, given all the lockdowns, the employment issues, and so I think there's a lot to be said about how the government should help with the economy. And you're right, Li Keqiang has won 3 times in the recent weeks about slow down the economy, and he has talked to experts, local government officials to stabilize employment and prices. So we're hoping that the government is going to come up with stronger support. Right now, a lot of support comes from tax refunds, tax reductions, or rent exemptions or concessionary loans. But I think these will be enough. I think a lot more policy need to be put in place. Cash handouts to families to purchase these basic products to cope with inflation, the shortages of, products. And, the government could nationalize the payrolls for, small and medium-sized companies, just like, UK and Denmark, their governments have done that at the height of their coronavirus pandemic. So I think bolder policies should be implemented to help the economy and help the people.
Just quickly, we've only got a few seconds. Do you feel that's coming down the pipe? Because that would be quite a big move.
Right, I think we'll see. The government Politburo is having a conference on economic sort of affairs. So I think we should expect to see some policies coming down from the pipeline. But if it's bolder actions or still small sort of patchwork, that's still remaining to be seen. But yes, a lot of the forecasters have lowered China's annual growth rate. World Bank, for example, now is putting the annual growth rate estimate to about 5%. And some of our others are even lowering that to 4.5%. So hopefully, the government will flex its fiscal muscle and try to boost the economy more.
Thanks to Yan Liang, Professor of Economics at Willamette University. Always a pleasure to talk to you. Thank you so much.